Thank you for joining Market News with Rodney Lake. This is a regular program for the GW Investment Institute, where we talk about timely market topics. I'm Rodney Lake, the director of the GW Investment Institute. Let's get started. Welcome back to Market News with Rodney Lake. I'm your host, Rodney Lake. Today, we're hosting a special guest, Dr. Gergana Jostova. Thank you for joining us, and thank you for being a guest on Market News with Rodney Lake. We really appreciate you being here, and thanks for your time. Could you first start with an introduction?
Thank you, Rodney. Thank you for having me here.
Of course.
So I've been at GW, can you believe it, 22 years as a faculty. And right after I took my PhD from Boston College in finance. And before that, I did my Master of Science in Finance at Boston College. And in between, or during my PhD, I worked a couple of times on Wall Street. And I know you just had the trip there.
Yeah.
JP Morgan and Deutsche Bank. I can expand on that later.
Yeah, but we'll round back to that, please.
Yeah. And before that, I did my undergraduate in American University in Bulgaria, which is where I'm from.
Fantastic.
And just my path just started like that. I was not planning to do a PhD. So for those of you who do not plan to do a PhD, it's okay. I was doing
what
my
was
master.
The plan?
The plan was to do my Master of Science in Finance at Boston College. And by the end of the year, my professor said, you should do a PhD. And I said, PhD? I don't know. I'm not that kind of person. But let me try it because I'm not one to give up on opportunities. Yeah. So I decided to try it. I loved it. And I think that turned out
so this professor made this sort of catalyst and changed your life.
Exactly. And sometimes I do that to my students too. I say, I think you should be doing a PhD or you should be doing a more advanced degree. And people don't think sometimes of, is it really me?
Or I shouldn't do this.
But you never know until you try it. So you should definitely
you're paying it forward. Thanks for doing that.
Yes, absolutely.
And so you've been at GW 20 years, which is fantastic. And I'm sure the time is flying.
Yes.
And thanks for all the service that you've been doing at GW. So maybe you talk a little bit about the work you've done at GW so far. So you're faculty in the finance department. You've also published a lot of research. So maybe talk about that. And then now you're the chair of the finance department. So maybe you bring us up to speed then on your activities now.
So you never know where you're going to end up. You just go along the path and then some opportunities emerge and, why not try them? So my research, I've been involved in research mostly for the past 22 years. My research really started on Wall Street. So back there, I was on the trading floor doing research, and my job was to find strategies that will work and make money, of course. That's what we do, right?
That's Wall Street.
And I'm still doing that, but from an academic perspective. So what does that mean, an academic perspective? So for example, if you want to sell a good strategy to Wall Street, you have to do all the robustness tests to show that it works.
Right.
And that's where it stops because that's what you want, that it works. In finance, in the academic world, we want to understand why it works. Because if people are rational, there's some relationships in finance. Like, for example, if you want a higher return, you should be willing to accept higher risk.
Right.
And otherwise, if something is risky and you're not, as a company, providing the higher return, why would people invest in your company, right? They would invest in government bonds. So there has to be a risk premium, as we call it. And whenever we see that there are certain strategies that make money, but without the extra risk, we call them anomalies in the academic world.
Right.
Again, hedge funds will call it profitable trading opportunities because if you can make money without extra risk, why not?
Exactly.
And so that's what I've been trying to understand for the last 22 years. Same strategies that I've been trying to understand then. So at the beginning, we were trying to figure out, is it maybe some extra risks that we didn't really measure correctly? That maybe we thought was not extra risk, but maybe it is some extra risk. But more and more in my latest research, it's been showing that there's behavioral biases that people have. So, for example, people tend to be too optimistic. And to show my students, by the way, that they are too optimistic, I do
I don't think you can ever be too optimistic.
In class. No, but I'll tell you.
I'm just joking.
So I ask my students to do a questionnaire during one of the classes. And I ask them, do you think you'll do better than average at the final? And 90% think they do better than average. So by definition, it should be about 50% better than average in the class. Exactly. They could all be great, but better than average. So 90% of the people think that they're better than average. And this makes us trade sometimes and believe that we can beat the market when
When maybe
most
we
of
cannot.
the time we cannot. Yes, most of the research shows that we cannot. So I'm trying to understand those behavioral biases. But just to note that it's actually a good thing to be optimist. Society wouldn't progress unless we have those optimists, because if, let's say, 80% of the businesses fail, who's going to invent the next thing?
Right.
So we want those optimists.
You have to be optimistic.
But for trading, it's a little bit, you have to be careful. You have to know that it is very hard to beat the market by definition, because everybody's trying to beat it. So by that, the price reflects the information that everybody has. So let's say you have good information about the stock, you'll start buying. So the price is going to go up. So even if you don't tell people that you have good information, the price should reflect it because you're buying, right? Yeah. And so these are things that we're trying to understand. Another behavioral bias is lottery type preferences. We tend to think that little stock that, lost so much money, it's going to go up again because it looks like a lottery ticket, right? So we pay 2 cents for it. So those are the biases that we're kind of trying to understand.
And I think it's an important distinction for people listening and watching on YouTube to think about that on Wall Street. If you're building these strategies, they're not necessarily concerned why they work. They want to know, do they work?
Exactly.
And then we deploy that until it stops working, and then we find something else. But on the academic side, it's very different. We want to know not only does it work, but we want to understand why it actually works. And I think that's an important distinction. Thank you for making that, for people to understand the difference between if you're deploying a strategy on Wall Street in a hedge fund versus trying to do rigorous academic research around that strategy. So that's super helpful. Maybe you could also now talk about the types of classes that you teach. So you do research at GW, you teach at GW. What kind of classes do you teach?
So the whole spectrum, and I love that it's the whole spectrum. So I teach from the first basic finance class, and I love it. It's one of my favorite classes because I want to put people on a right start, financial start in life. You wouldn't believe how many people have not started to invest until much later in their life when it's too late.
Yeah.
As they say, the compounding, and I'll give you an example, is like almost like they say the 8th wonder of the world, right? Because it can do wonders. Just one example I give to my undergraduate students, and I'll get to the other classes I teach.
Sure.
So if you, so let's say the stock market in the last 100 years has returned about 12% per year. In fact, if you look at NASDAQ, it's 18% per year average. But let's stick with 12. But let's stick at 12. Yes, it's pretty good. 12 on average. Doesn't mean every year. Some years it's going to be down. Some years it's going to be up, just like recently. But let's say you decide to skip coffee. $3 a day. You put it in a drawer, and you do that when starting at 20 until retirement, let's say 65.
Yeah.
If you invest it in the stock market, let's say at the end of the year, if you don't have to have $3 in.
Every day, yeah.
Yes. At the end of, when you retire, you'll have $1.5 million.
That's
so
incredible.
Totally manageable. Just skipping coffee or just maybe no latte.
At the end of the year, put it in an index, let it grow.
At 12% average. If you put it in NASDAQ and higher, maybe it's even better. But if you start at 40, do the same thing, and you would think, okay, it's not too late because it's half the time, half the time. You will end up with 140,000.
Dramatic difference.
10 times less. So that's why start early. That's why I love teaching that class, because these are skills that you need. You really have to know those things from the very beginning because you still have time to invest. And in fact, they have a project in the class where they have to make a short video and to convince other college students that it's important to start early. And they have been super creative. In fact, in the last year, they have even used AI to impersonate some celebrities and to convince other people. Great. So the other class that I teach is a Master of Science in Finance Investments in the Master of Science in Finance program, which is a big jump from that other one, because there we optimize portfolios, we use different assets, and how do you minimize the risk and maximize the return? Because these are the two big things in investing, right?
Exactly.
Maximum return, minimum risk. That's what we do. And in fact, we do it with programming. And so it's a lot. We get real data from Bloomberg and then optimize it through with MATLAB. So so much more quantitative. And when we used to have a PhD program, because now we're kind of we had stopped it for a little bit, but we're going to restart it soon. I was teaching the PhD in investments class, which basically is everything in my research, like all of these like trading strategies.
And maybe just picking up on sort of the rigor around the graduate portion of this, but I think it also applies to undergraduates. Could you talk a little bit about, and this is again for the viewers and listeners to understand, if you're going to go into finance, the importance of learning some programming language?
Yes, absolutely. And in fact, we offer some very exciting classes right now. Like, for example, there's Python and finance, like all kinds of trading strategies that I was talking about. They do them in Python. So we are teaching that at the undergraduate level, very popular class. And yeah, it's very important because think about it. Can you really have a job, trading job, and manage many stocks by hand? So you have to have a computer, and the computer, that's the language that they know, is programming. So you do have to have. Fortunately, I'm hearing that more and more, especially Python. So I don't program in Python, but maybe I'll have to switch I've been programming MATLAB.
Okay.
But more and more, this generation now is learning Python, and they say you can learn it like in a week. So hopefully that is working, but it's very popular because it's free. Like MATLAB is paid.
Right.
However, GW pays for all of our students, so we have been using MATLAB. Exactly. But it's very expensive for companies and for institutions. But Python is free, so there are a lot of built-in programs you can download from the internet. It's open source. So, and ChatGPT can actually
program in Python.
Yes. I've tried it with ChatGPT to program in MATLAB. They're not very good at that because ChatGPT basically uses the knowledge from the internet. Yes. And since MATLAB is not free, it's not good with figuring out how to work. But Python is free, so ChatGPT can do a lot for you.
Well, I think that's important. Thank you for mentioning that and stating that. I also agree that many of the students in finance, it's also my home department, I'm a little bit biased here too, is that students really need to understand both on the undergrad and grad side that if you're going to get a job, especially if you're going to be a more junior person, the expectation is that you're going to have some of those hard skills when you come in because the senior people are probably not going to learn Python if they don't want to.
Exactly.
So they're going to say, hey, you should learn this. And maybe if you're using that plus ChatGPT, that's great. But I think it's good to encourage our students, as you mentioned, and we have classes that we're offering now in Python, and really understanding that programming is important, MATLAB, Python, and anything else that is relevant. It could change, but understanding how that works is important.
In fact, I was just going to mention the example. The reason why I'm doing this in my Master of Science in Finance class, teaching them MATLAB and Bloomberg or any programming that they want, is that this is what I faced when I got this job in JP Morgan first on the trading floor. Basically, I arrived and they told me, oh, this is your computer. You have MATLAB, Bloomberg, anything else you need? And so I had to kind of learn it on the job fast. But if you have those skills already, arriving on the job, you make a much better impression.
Right.
Yes.
And thanks for mentioning that too. So our students have access to Bloomberg here. They have access now to FactSet. In some of our specialized classes, we offer access to Aladdin, which is part of BlackRock's setup for risk and analytics. So I think, as you mentioned, learning those systems is very important. And maybe let's skip back a little bit before we get to the chair of the finance department, but let's get back to your work on Wall Street. Maybe could you just offer a little bit about what you did there? You mentioned it a little bit already, and then how that led you to the academic world.
Yes, I sometimes say that the academic world changed my life, and I can explain why. I loved what I did on Wall Street. So basically, it was on the trading floor, and yes, we had to develop some models. I was already kind of completed, in my fourth year during my PhD, so I already had some programming and research skills to do that. So I could have stayed, but I really wanted to explore the academic world as well, because it's almost like a one-way street, the academic. It's very difficult if you are on Wall Street to move back to academia, especially on the research tenure track side, than it is the other way around. A lot of successful professors actually either consult or work or move on to Wall Street, but the other way around is very difficult. Why is it difficult? Because the academic institutions want you to have publications. If you have great ideas on Wall Street, they're not going to let you publish them. And so therefore, it's a one-way street. So that's why I wanted to try it. But anyway, I tried it. First, it was JP Morgan on the trading floor. And the next year, they called me. The whole group had moved to Deutsche Bank. And that's why I went to Deutsche Bank the second time, but kind of working with the same group.
Nice.
But this was actually a week before 9/11 when I was leaving, September. And September is the time when, if you go to the academic market, which means interview with universities, there's a very strict schedule. So you have to basically send your papers in September. By October, they call you. By January, they fly you out to different campuses. So it's very structured. So I had to leave at the beginning of September. And they told me, like, stay, finish your models. But they said, no, I have to go. And September 11 happened after. And back then, actually, JP Morgan still used to be on Wall Street, like on the little street, and my apartment across from the Twin Towers. Yes. So it saved my job, saved my life. But I was fascinated by what I did there. And I'm researching what I did there. So,
excellent. Well, we talked about your work there now. We doubled back on that, so thank you. And you talked about your work on the research side and the classes that you teach. But now you've also taken on an administrative job. You're now the chair of the finance department, which is a very important job and sometimes can be a very time-intensive job. Could you explain maybe what the chair of a department does and your outlook for the finance department?
Well, thank you. Yeah, I was not planning for that, and you have
thank
been
you for your service.
have been the chair.
I was
so
co-chair.
You know, co-chair exactly. So you know how
you're doing it by yourself.
Because I was so focused on research and teaching, it's almost like the administrative side has completely been kind of a dark space for the last 22 years. I just didn't need to know so much. Exactly, because you have only 24 hours in a day.
Well, you need some sleep, maybe 2 hours at least.
Exactly. And so, so this is a new thing for me. I started on July 1st. So for me, it was a steep learning curve. What does the department chair do? And so I wasn't sure. And so I'm learning, but thankfully I have colleagues who have done it. So Min, for example.
Yeah, Min is great.
And he's been
always super helpful,
helping me to transition into the role. So the big thing that the finance, that the department chair does is I say, I'm the butler. I'm not the boss, the butler. You're making sure that the department runs smoothly.
Everything
so that
goes.
means that all the classes have been assigned to the right people, and the right people know what they're supposed to teach, and everybody's happy with what they're teaching, and the students are happy with the faculty that they're teaching them. So it's really about managing the resources that we have, which is students and faculty.
So you're like the chief operating officer for the finance department.
You can say that. Yeah. Okay, if not butler, you've upgraded me a little bit. Exactly.
Well, it's an important job. And so far, what are your thoughts so far about the department, and what ideas do you have for the department?
So my ideas would be to expand. So just like a business, you want to grow, right? Grow with faculty, grow with students, new programs. The world is expanding vastly and quickly, and the finance profession is expanding. So we need to move with the profession. So I'm hoping new programs that focus on AI, or more on socially sustainable finance. So I'm still learning and getting the perspective of different faculty. So it is going to be probably slow, but I'm hoping to get there. Yeah,
excellent.
That's my goal.
And finance is an important major for undergrad. As you know, I serve as vice dean for undergraduate programs as well. And about 20% of our students, which is one of the largest majors, if not the largest major, year to year on the undergraduate side. Could you maybe talk to what students could go do after, getting an undergraduate degree in finance, and why you think that's an important major?
Exactly. So there are two really big areas in finance. I usually say to my students, you kind of imagine on one side of the classroom is the businesses, and the other side of the classroom is the investors.
Yeah.
They need each other. Businesses need money because they need to run their operations, and investors need a rate of return. So finance is really connecting the two. So when you go work in finance, you can either go work in one side or the other. So if you go into portfolio management and mutual funds, hedge funds, pension funds, you will be looking at many companies from the outside and trying to figure out how to combine those in a portfolio that will create minimum risk and maximum return. Alternatively, you can go, so this is for the investors.
Yeah.
If you're going for the companies, you can be on the inside, that's the corporate finance side. So you have the investment side and the corporate finance side. You can work for any company, and any company needs a finance person. So you'll be the CFO, let's say, or helping the CFO, trying to get to the CFO position. But these will be decisions like deciding whether a company should pay dividends or whether we should reinvest the money inside the business.
These capital allocation decisions.
Exactly. Very important decisions. That's an interesting behavioral bias too, that people tend to think that dividend-paying companies are good, right? Because we call it bird in the hand.
Right.
You expect that if they're paying dividends, that means they have cash. But think of it the other way. If they have cash, that means that they don't have maybe profitable investment opportunities, right? So a lot of these big new startups, they actually don't have cash, and they reinvest everything they can get in the business. So having investment opportunities is not a bad thing. Microsoft didn't pay dividends for 20 years, and Apple didn't pay at the beginning. And you want to keep that money because new opportunities arise. You want to have it when opportunities arise, or maybe you are involved in such opportunities. So decisions like that. Should you pay dividends? What signal are you giving to investors if you pay dividends? If you don't pay dividends because you're using them in profitable investment opportunities, how do you communicate that to investors, not to scare them that you're gonna skip a dividend?
So having a really core understanding of finance and elevating your way through one of those positions, you can have a big impact on the outcome of a company, helping making these capital allocation decisions, as you pointed out. And so that's two sides of that coin, as you mentioned. And so thank you for saying that. And now maybe on the graduate side, mentioned, what are some of the jobs where students are going to for after grad school, after the one of our master's programs?
Yes. So this will be, again, either one side of the room where you're working for one company to manage it, or looking at many companies on the outside and trying to figure out what's the best combination between them. But you'll be doing it at a much higher level, right? Of course. So maybe more managerial type of portfolio management jobs. And of course, you can grow into those at different levels. And a lot of people decide to work after the undergraduate and then get some work experience and then go back and figure out, learn more about what they're passionate about, because you don't know what you're passionate about until you try it, right? Precisely.
Well, so now we're going to move to wrap up here. So thank you for your services, Chair, for the Finance Department. It's a very important job, and we're delighted. We're all delighted that you're doing this. So thank you very much, and you're already doing a fantastic job. Thank you. So now let's move on to maybe advice. Okay. So what advice would you have for our listeners, our viewers? Maybe it could be students or anybody that's watching, either about, you mentioned personal finance or anything else that you would like to talk about.
So my first advice is, again, if it's for investing, start early. Manage your personal finances, because a small decision today could have big repercussions into the future. Like if you don't take the right decisions, the right steps. On the outside of finance, what I tell my kids as well is, do not say no to an opportunity. When there's an option, it's like an option in finance, right? You have the option to do something. It has value. If you give it up, then you're never going to... Exactly. And don't be afraid of failure. I have actually a good example from Google's actually CFO, a very smart woman who said the following thing. So she said, every trimester, let's say, or every year, we sit down and make strategic plans for the year. Let's say we decide on 10 strategic plans to do for the year. Okay. If we achieve all of them, it's bad. That means that we were shooting too low.
Right. Not aggressive enough.
Exactly. Not aggressive enough. If you achieve too little, maybe you're not realistic. Yeah. So achieving 2/3 is kind of our golden target.
Sweet spot.
And so that's what I tell people, that if you are afraid to try things because you might fail, you're not shooting too high, right? So you have to try things, and some of them are going to fail, and that's okay. Right. And some of them are not. And so we have to experiment, try. Don't be afraid of failure. Failure is just a learning opportunity.
Well, I think that's excellent advice. I think we'll leave it there. Thank you, Professor Jostova, for joining Market News with Rodney Lake. Very much appreciated. And that's a wrap for Market News with Rodney Lake. We'll see you back on the next episode. As a reminder, this is not investment advice, and saying goodbye from the Duquesne Innovation Studio. See you next time. Disclaimer: the content shared in the GW Investment Institute podcast is for informational and educational purposes only and should not be considered investment advice. The opinions expressed in this podcast are those of the host and guests and do not necessarily reflect the views of the GW Investment Institute or the George Washington University. Listeners should not act upon the information provided without seeking professional advice from a qualified financial advisor. Investing involves risks, including the loss of principal. The GW Investment Institute, the George Washington University, and the podcast hosts do not assume any responsibility for any investment decisions made based on the content of this podcast. Always conduct your own research and consult with a financial advisor before making any investment decisions.